So Dave, the term was robust.
Yeah.
What's going on with the real estate market this last quarter?
Oh man. Well, I'll tell you, last year we were pretty excited about what was going on
Yes.
this time of year, and this year we are very excited. I mean, the market from a demand perspective has really returned to what I guess we would consider full throttle, normal. I don't know if it's normal or abnormal, but it's a full throttle, very, very busy market. Some of our best agents are the busiest they've ever been, and it's really been a change because what's the big thing that's changed this year going into this spring is the level of inventories is so low compared to where it was a year ago. If you look at Dane County, we've gone from 7.5 months of inventory to 4.8 months of inventory in 1 year. In condo, we've gone from 16.7 months of inventory to 7.6 months of inventory. Unbelievable reduction in the level of inventories in relation to demand. So now we're starting to see buyers being forced to have to compete with each other. And they are. A well-priced listing that hits the market now with multiple offers almost immediately. So just a totally different market from what we've seen in the last 5 or 6 years. And even much more vigorous than it was a year ago.
And yet you said prices are not moving a whole lot? What's
Not
happening?
yet. Not yet. Last year was very interesting. We spoke about this in other newsletters. We spoke about it in other videos. Oddly, last year, even though it was a transition year and we saw the market kind of get back up closer to what we thought was normal, prices, to the extent that you could measure them, were very flat. Really didn't move up much at all. And so far this year, in the first quarter, the median price has crept up maybe 1 or 2% from 3 months ago. Whether that's meaningful or not is too early to tell. With inventories this low and with demand this high, I think the likelihood that prices will eventually start to increase is inevitable. But so far it hasn't really happened. So if you're a buyer, there's still, you haven't missed yet. But clearly there's starting to be, the movement is upward. If you're a seller, I think you have to be a little bit careful. You don't want to, we're still seeing evidence where if you overprice by too much, you're sitting. And if you sit too long, you start to become shop born, and that's still an issue. But it's less of an issue, and I think your odds are much better than they were. So certainly that dynamic is improving a lot. One thing I do want to add, I know you were going to ask me about it, is nationally we're seeing evidence that prices are going up a lot more.
Right. Certain markets, yeah.
Yeah, the Case-Shiller Index, I think through January at least, was showing an 8.1% increase year over year. That's not been our experience here, and I think that the thing consumers have to bear in mind about that is that Case-Shiller doesn't measure our market, it measures a lot of other markets. A lot of the markets it measures are markets that saw a big price increase, a big price drop, and now that increase is really off of a probably lower than fundamental floor, kind of working its way back up. So if you're trying to sell here, I wouldn't read a lot into that. Our prices have been very flat. But will they start to head up moving forward? I think the likely answer to that is yes.
And you also mentioned Zillow. I remember a house in the neighborhood that sold a few years ago, and within a month, Zillow's estimate was a third of the actual sale price. Just absurd.
Yeah, those national indices, they can be very, very misleading. Right. The Zestimate, and I think I've got this right. A speaker from Zillow told us that their Zestimate attempts to peg prices within 20% of the actual value 80% of the time. Well, that's really not very that's almost as good as a dartboard.
Right.
So I would encourage consumers not to put a lot of stock in that and rather look at the individual dynamics in their neighborhood. That's really the only way you can do it.
So for buyers, the mortgage market continues to be pretty good.
Yeah. See, that's the other part about this. I think that's part of the reason we're seeing this almost hyper demand. Interest rates are still at 3.5% for a 30-year fixed rate loan, 2.5% to whatever for 15 year. So we're still in a very, very favorable interest rate environment, and it's been the Fed's made it pretty clear they're going to keep it this way for a while. If you look at what's going on macroeconomically, and we won't spend all day talking about that. But clearly there's still deleveraging going on in the economy, and I think the Fed is doing what they can to fight it. And so rates are going to stay low, and for a little bit. So now is the time to take advantage of it. But of course, the low rates will create demand. Demand will create upward pressure on prices. So either way, as those two things are going to ratchet themselves up over time, and I think taking advantage of it now is the right course.
And finally, the rental market continues to, I guess, be somewhat frothy. I'm sort of amazed at the rates they're getting, and so what does that mean for demand and sellers and buyers?
Well, you have household formation starting to take off, and you have Epic is really
Sure.
a phenomenon here. There's a lot of young professional people who are coming into our market. They're not quite ready to settle down and put their roots
Right.
down, so a lot of them are renting. Nationally, we're seeing a lot of demographic trends that are favoring renting a little bit more than buyers. This is sort of on the margin, but that matters in a market like this. So yeah, the rental market is very, very good. I think the other part that you should mention though is new construction. In a low interest rate environment like this, or excuse me, a low inventory environment like this, a lot of buyers are having trouble finding what they want. And so I would encourage buyers now to start to look at new construction as an option if they can't find it in the used market. They might well, I'm not saying abandon the used market for sure, but new construction has been flat on its back for a long time, probably impacted more than any other segment of the housing economy. And we're starting to see some evidence that things are moving there. The builders I'm talking to say, yeah, they're getting busy. And so that's worth a look because I think you're going to see new construction really start to take off.
Interesting. Well, we'll look forward to catching up again in a
Thank
quarter,
you.
Dave.
Yep.
Thanks much.